The price of wheat is going to £400, the price of rapeseed is going to £800. Do I have your attention? Actually, I have no idea where the price of wheat is going, or the price of rapeseed for that matter, but I wanted to do 4 things today. We're talking about global trends, so I wanted to outline some of the mega trends that have built up the situation to what it is today. They're actually covered very well in the foresight document, we thought. Talk a little bit about what the future holds. What is the impact on farmers? How is it going to be different for you going forward? And then what role can companies such as Cargill and others play? So hopefully they have some slides up here. What's going on? What does the future hold? Impact on farmers. So here we go. My secretary likes doing this. So, we believe as Cargill it is unmitigated good news that rising incomes around the world have led to an improvement in the diets of tens of millions of people. That leads to a diet which moves essentially from rice to wheat, ultimately to meat. And that means that the intensification of diets increases and the requirement for food increases very sharply. So you've heard the statistics, 40% more food in the next 20 to 25 years. And everyone says, gosh, isn't that incredible? Can we do it? We've done it before. We've done that in the last 30 years globally with no increase in land. So we as a company are extremely optimistic that this can be done. Okay. Yeah. Some of you will have seen these charts before. It just shows that as incomes rise above that very basic subsistence level, you start to see very sharp increases in grain, in meat, in sucrose in its various forms, in vegetable oil, and this is the largest driving force in global agriculture today. And as I said, it's unmitigated good news because it means with so many people being lifted out of poverty. The second one, and this is more recent. Energy and agriculture have become inextricably linked. The most obvious way is via biofuels, and this just shows in the last decade alone, globally, the use of grain going to ethanol has risen from under 20 million to 160 million tons. In the case of veg oil, it's from less than 1 million tons to almost 24 million tons of vegetable oil. That's multiples of the veg oil that is produced here in the UK is going to biofuel. The impact of those government policies which drive that are enormous. So this year in the United States, there is 5.25 billion bushels, they use these quaint old-fashioned terms there, going into food and feed, and 4.95 billion bushels going into ethanol. Next year, it is likely that ethanol will be the single largest user of the North American maize crop. Now, what that does is have a modest impact on the energy market. We talk about having 5 and 7.5 and then 10% of our motor transport fuel replaced by renewables, but the impact on agriculture is enormous. For example, the USDA last week published the stocks as a percentage of use of the US corn crop, which is the biggest crop in the United States. If ethanol was to be reduced by 15%, so at the margin, it would double the ending stocks. So as farmers, you have to have as much attention today on the energy markets as you do on the commodity markets. And of course, the other element of this is that it has a huge input on your input costs, particularly for fertilizer as well as for transportation. So Cargill owns 2/3 of a listed company called the Mosaic Company, one of the top producers of potash fertilizer in the world. the price of that is directly correlated to the price of corn. The price of corn is directly correlated to the price of crude oil. Very much linked. And of course, the energy markets are so much bigger than the agricultural markets that that drives the volatility. The third point, yeah, this is another one on just the proportion of these products, European veg oils and US corn supply going into biofuel and biodiesel. That's not to mention sugar in places like Brazil. The third point, there's been a long-term underinvestment in agricultural infrastructure globally. That's both hard assets, transportation, rail, silos, but also soft assets, such as, we heard one of the questions, the ability to bring new young talent into the industry. It was encouraging to hear Caroline Spellman answer very directly to a question that the government is going to add £12.6 million into new agricultural research. Globally, it was declining year on year on year for 20 years because we had an era of surplus food. It was simply wasn't on the agenda. The fourth one, that commodities have been seen as an inflation hedge, an asset class attracting new investors. There have always been speculators in agricultural markets. But you can see from this chart just how much, particularly in the last 2 years, they've increased. And this is with the price of interest rates dropping so much. Many investors have been looking for anything where they believe that they can get a superior return. There's all sorts of commentary, both in the United States and led by that great free trader, Nicolas Sarkozy, to try and change that landscape. As a company, we don't have a problem with that, although we're suspicious sometimes at where some of the thinking comes from about whether it'll be helpful in the ultimate goal. And then the final point that we saw, and this brings us very much up to date, when we sat down as a company literally in April 2010 and we surveyed the world of commodities, we were extremely bearish, extremely bearish. The phrase that's frequently used is we were so bearish we couldn't see straight. And what happened over the next 6 months is, first of all, in Australia, and then in Russia and the Ukraine, and then in Germany and France, and then in the United States, we saw 80 million tons of grain knocked off our estimates. And so the real proximate driver of what's happened over the last 6 months to prices has been a supply-side shock. The demand is modestly higher than expected, and what we've seen in the Middle East, the reaction sometimes of governments to prices is to try and get ahead and buy more, which exacerbates the price rise in the first place. But what's very clear is that some of what's going on in the Middle East is linked to the food price inflation. So those have been some of the drivers that have led to the high prices we have today, but also the extreme volatility that we've been living with over the last few years.